Hello and welcome to this special report here at XM.com. I'm Maria Pachortiz, and joining me is Senior Investment Analyst Rafi Boyadjian. We'll be discussing the rally in global bond yields and the reaction in the dollar. So Rafi, the U.S. recovery is doing fairly well so far, and there is a supersized fiscal stimulus package on the horizon, as well as the ongoing vaccination program, which is gaining ground. In addition, the Federal Reserve is pledging to maintain accommodative monetary policy for as long as needed. So all this is leading investors to bet on an inflation revival in the near future. Yet we're seeing the dollar come under pressure recently. Why is that?
So Maria, that is right. So we are seeing some unexpected weakness in the US dollar, given that it had a fairly good start to the year. Now, so we did see this surge in treasury yields in January and then further increases in February. Now, long-dated yields, mainly the 10-year yield, it had been rising steadily since the autumn, and they did get a bit of pace after the presidential election. But at the time, because real yields were falling due to rising inflation expectations, so it didn't have much of an impact on the dollar. But now that we are seeing this acceleration in nominal yields, we're seeing real yields rise too, and all of this is back on basically the Democrats' victory in the Georgia runoffs, which secured them control over both chambers of Congress. So that means that we're going to see further big stimulus packages coming out of the US, and all of this will lead to higher inflation and higher growth. But now that we head further out into the year and we're seeing vaccine rollouts in other countries, we're seeing this optimism around vaccinations and also all the stimulus, not just in the US but elsewhere too. So this optimism is intensifying, and therefore global recovery is becoming more certain. So other yields have started to rise quite significantly now, especially those of, say, Australia and New Zealand. So even though the US economic outlook does remain strong, all of this is offsetting the dollar's yield advantage.
So now that sovereign bonds around the world are joining in this yield rally, how much further are they expected to rise, and which currencies stand to benefit the most?
So now that is quite hard to say because, so first of all, government bonds are safe havens, so investors tend to sell them when the economic outlook brightens. So that is what pushes up the yield on government bonds. So if there is no setback in the global vaccination campaign and we do see a full reopening of economies later this year or early next year, there's a good chance that long-term yields will rise even further. The ones that would gain the most from this is probably the pound, because of course UK is leading the global vaccination race, at least in the bigger economies, and commodity-linked dollars such as the Australian and New Zealand dollars, they're doing fairly well too because they're already in a pretty strong position to begin with, and once their vaccination programs get underway as well, they're going to do even better. And also on top of that, we're seeing higher commodity prices. So those currencies, the riskier currencies, should benefit more because we're seeing their yields rise due to the strong outlook for those economies. On the other hand, if you look at the euro, it's suffering because of the EU's vaccine shambles. And more interestingly, though, what we're seeing in the yen, even though Japanese recovery isn't doing too badly, Japan is a special case because the Bank of Japan has a yield curve control, so they're capping the 10-year yield near zero. So if we see other currencies yields rise and the yen's yield staying at zero, then that obviously would be negative for the yen, regardless of what happens to the Japanese economy.
Does all this mean that there's no prospect of the dollar making a comeback this year? Is there anything that can reignite the positive momentum for the dollar?
So Maria, that is an interesting question because it really all depends on whether or not we see an uptick in inflation. Now, there is a lot of speculation that inflation will make a comeback later this year because of all the stimulus that is being pumped into the US and the global economy. So at the moment, the rise in yields of other currencies is enough to offset the rise in US yields. So that's why the dollar is suffering. But if we do see actual inflation start to rise, then that could change everything, because then that would force the Fed to start tapering its asset purchases earlier than expected, and then that would definitely boost the US dollar. If though inflation rises only temporarily, which is what the Fed is saying is going to happen, so which is why for now they're not concerned about the small inflationary pressures that we're seeing build up in various sectors of the economy, then we're not going to see much of an impact, and then we could even see yields fall back after that, and that would be even more negative for the US dollar. So really is all about what's going to happen to inflation later in the year. Will we see a comeback in inflation, and will the Fed respond to it?
Rafi, thanks so much. And thanks for joining us at XM.com.